Super quick clip, Francis Hunt, the market sniper. So Ethereum's big run, we warned, this was on my trading day and in my private boards, my premium Basecamp boards, that we've had inverted structure on Ethereum, and that means it's pullback time. Here's the inverted structure over here. Obviously it got choppy and blow off. The blow off was always near the end of the move. So we went right through the 10% to a Bitcoin. This is Ethereum to Bitcoin, nothing else. This is one of the most important measurements and benchmarks you must use, is one crypto to the primary crypto for allocation of your cryptos. We were all into cryptos. Which one is the one that's going to do the running is the question we are looking to answer. So we had the Ethereum being the big bull against the Bitcoin and against everything else at that point. Classic had an even bigger run in a form, but then it got the choppy. This blow-off moments, whenever you're getting complete blow-off moments, remember that you were coming from down here at about 7. You had a bull flag continuation with quite a strong little wick sell-off, and it continued and went completely melt up. When you go completely melt up, remember this is a 15-minute chart I'm looking at here with a log scale. Log scale reduces the view. Log scale is a percentage gain. I certainly suggest with these underlyings you look at the log scale. This is it without the log scale, and you can see how even more extreme the blow-off moments are. So the blow-off moments precede a temporary respite and a pullback, and this is what's going on. So with the sell-off here and then the wild rally back up, you should be understanding that the volatility has gone high now. And this is potential change. So here we had the inverted structure, HVF, the low 1, the high 1, the low 2, the high 2, the low 3, and the high 3. And there's your triggering event short. Now, I don't tend to take the shorts. What I do though, is when I get inverted structure, I don't stay long. And as a result, you would have had the targets if you had traded it short from there, or not made the loss in the drawdown that has subsequently occurred. Because also this is the first setup in a new trend, you'll also have the probability of overperformance. That means it can go further. We churned for a while, so it looked like there might not be overperformance. There was quite an impulsive reaction after we've made the target twice. Initially after making it the first time on a wick, which shows what a great line of efficiency. Learn what a line of efficiency is on my program and how we exploit that. But the steepness of the line is what you're about. The shortest amount of time on risk for the greatest gain. And you get that rally, it dipped it again, and you get the rally again for a second time, it dipped it again. And you can see this is a key level of significance. It also runs midway through this flag here, where last time you had a pause, you ran through it, pulled back under it. So key level of significance there. And eventually it's been let go, and it's dribbling down to the downside with a couple of spikes. So Ethereum has been bleeding off relative to Bitcoin. And of course, this also coincides with the analysis we gave regarding Bitcoin as a whole, stating that the Bitcoin is in an upside target. If you look at when we first drew this, this over here, you can see how this has now gone forward to make target on here. So these charts are going to be private shared to my premium clients. So if you want to be part of the private following, get in touch on TradingView. There will be a product and subscription opportunity for you there. So this was clear that Bitcoin was the runner. So as you're getting Bitcoin being strong, you've had Ethereum that has been strong and is getting choppy, and you're getting the volatility that implies pullback time. You then get the inverted structure on Ethereum that I've just been showing you, and then what the long and short of that is that you are coming back. Where's that Ethereum chart? There she blows. So that just tells you for allocation where you should have been. You should have been in the Bitcoin and where you stand. There's lots of other exciting setups potentially occurring on this. I don't intend to go into all of that here. This is a free YouTube that will be made available, but get in touch if you want to get this kind of information in advance as it is happening. Support at the Market Sniper if you like, and if you want. There could be scope for further downside on Ethereum, but it's not capitulative, so I would guesstimate that this will come to a rest at some point soon. I don't think it's going all the way back down. So this is not a uber bear call on Ethereum. It's just an allocation moment. You're spending time in the winner of the moment. This is a fair old retracement since the last low. So if we pull this, let me get these lines rid of these lines. If we pull this into view and just give you a quick heads up on the Fibonacci extension, you can see how far it's come back from its low of its last move from to the high. At the moment we are at, and it's usually a laugh out loud moment because there's often significance with it, and I think you're looking at the 50 just being run, so it's quite a significant pullback. Bitcoin has been obviously very strong as well, so I'm going to pull that through and you'll see where we are now over there in terms of these two. So we've dipped below the 50%. The next golden mean inverse, so your 61.8 and 38.2, you'll have done a hole if we run down to this level. This is our funnel and a point of break. I would expect support before there. Otherwise, this is becoming a far more secular bear. But this is quite low vol, so it's sort of it's going to start grinding out a low on balance of probabilities. However, if it went capitulative, kind of in the converse of your melt up here, you could have a run that will come down to the funnel levels over here. A run through that, and we start to become more medium term concerned with Ethereum's relative strength to Bitcoin. So that's my take. I'm Francis. You're following the Market Sniper. Also set up now a Twitter handle called The Crypto Sniper. The Crypto Sniper, at The Crypto Sniper. So if you want to follow me there, you'll get some free crypto feed out there. If you really want to get under the skin and really want to seize this opportunity, I certainly suggest getting in touch and contemplating a program about how you can bring these skills to bear in one of the most exciting markets and be in the driving seat on balance of probabilities in most occasions, the key cryptos as they move forward. When a market is advancing like this, being in the right one can add an even larger multiplier effect to what you could achieve annually on your money. If you're sitting latent in Bitcoin and it's going to do 200% in a year, if you know just how to be semi-active. We're not day traders here. We're not thrashing in front of screens all day long. You've got a life to live, you've got jobs to go to. If you're just semi-active, that means occasional adjustments. You can 5 times, 6 times that number on an annual basis, and even 10 times it. So if you see the value in that, get in touch. If you don't and you just enjoy the clip, that's also cool. Share and rate if you get any value out of it. It's appreciated and it supports me. Thanks a lot, guys. Enjoy your weekend.